retirement annuity contract for tax relief. It's a little mouthful, you know. My consultants, my people around me chose this topic. They're like, Stan, you need to do this topic. I'm like, that's a weird word salad bunch of stuff. Hi there, Stan the Annuity Man, America's annuity agent, licensed in all 50 states and Puerto Rico. Looking forward to talking about this just because people have the IRS living in their head rent-free these days. I guess all the time. I guess that's what the IRS does. But we're going to talk about that. We're going to talk about the ways that some annuities can help and give you some tax relief after this. So I guess the first thing to do is just define tax relief. I mean, there's nothing tax-free unless you put the annuity inside of a Roth IRA. So annuities can be used in traditional IRAs, Roth IRAs, and non-IRAs, so non-qualified checking account type money. But if you want tax relief, you put an immediate annuity inside of a Roth IRA, and that lifetime income stream is going to be tax-free unless our politicians change the rules. Hopefully they grandfather you in, and that never happens. Now, one of the big things that's happening right now in the annuity industry, which is just horrific, borderline fraudulent, is that a lot of agents are having people do Roth conversions and using index annuities and bonuses and all that stuff to do it. Garbage, absolute garbage. Mathematically, they cannot show it working in a contractual way. They can only show it in an illustration that has non-guarantees, like hypotheticals and theoreticals, and those never come true. So be careful out there. I told a guy called in the other day, and he goes, he's being pitched this double index annuity, flipperoo, jibbity-doo, upfront bonus, and I went, you do know that you don't need annuities to do a Roth conversion, don't you? You could do it with any type of investments. Well, no, I didn't do that. Well, he explained it. You had to do it with annuities. Okay. Be careful out there. Tax relief when it comes to retirement contracts, you know, you can look at it a couple ways, like multi-year guarantee annuities, which is the annuity industry version of a CD. So you can lock in a specific interest rate for a specific period of time. Please don't make it any more difficult than that, please. You go to the bank, you buy a CD for a rate for a specific period of time. MYGAs are issued by life insurance companies, a rate for a specific period of time. The difference, however, in a non-IRA account, like a non-qualified checking account type money, that interest grows tax deferred. So with CDs, if you bought CDs in the same type of account, you have to pay taxes on the interest. With MYGA, you can defer that. Now, when you finally take it out, whoever takes it out you're going to have to pay taxes on that interest earned, but you can kick the tax can down the road, as they say in the South or in the North, push the tax puck down the ice, as they say in Minnesota, okay, or Wisconsin. You can do that, okay? I guess that's tax relief. For a lot of people that just want to protect the principal, MYGAs, multi-year guarantee annuity contracts, again, the annuity industry version of a CD, makes more sense than CDs because of that tax-deferred nature. They don't want to create more taxable events, okay? Also, in a non-IRA, non-qualified checking account type money, you can use an immediate annuity or a deferred income annuity and have just a portion of that income stream be taxable because lifetime income from those two products is a combination of return of principal plus interest. And if it's non-IRA, then you're only paying taxes on the interest. That's some tax relief. Qualified longevity annuity contracts can be used in an IRA. So if anyone says never use an annuity inside of an IRA, you might want to just nudge them and say, you're sounding stupid again because the IRS and the Treasury put this product on the planet in 2014 for use inside of a traditional IRA to lessen the taxes on your RMDs. The amount of money in a QLAC is not used to determine and calculate your RMDs within your IRA. So you can get some tax relief there. But be careful. You're going to hear a lot of things out there that from a tax relief standpoint. One of the ones that bothers me, life insurance, taking a loan from life insurance and that being tax-free income. No, that's not tax-free income, that's a loan. I had a guy argue with me the other day. He goes, no, it's tax-free. I went, no. I went, when you go to the bank and you take out a loan, is that income tax-free or is that a loan? He goes, that's a loan. I said, okay. When you go to the life insurance product that you were just sold and you take money out of it, is that income or is that a loan? He goes, that's income. I said, no, it's a loan. I mean, this guy was myopically convinced, well, that's tax-free. It told me it was tax-free. Okay, it's a loan. The IRS, our friends, there's not a lot of loopholes left. You know, the Roth IRA is a loophole, but you have to pay so much upfront in taxes that you have to mathematically run the calculation to see if it makes sense and how long it's going to take to break even. I'm amazed at people that go, well, Roth is tax-free. Yeah, I paid a lot of upfront taxes on that, but it's tax-free now. Did you run the number? Well, no. Okay. I'm not against them. I don't trust the government for changing the rules. They've changed rules on everything. Why won't they change rules on Roths? Hopefully they won't, because over 20% of the households have Roth IRAs in some form or fashion. Most of them are very, very small, because you can convert some 401ks allow that, to do some Roth conversions internally. And a lot of people have done that, but they're very small, but there's not a lot of money there. So from a voting block standpoint, I think politicians could smack Roth people around a little bit. Tax relief could come from, in my former days when I was with Morgan Stanley and UBS, tax-free municipal bonds, but they're hard to find. There's just not a lot of room legally for you to get a lot of tax relief. Annuities have, say, 3 or 4 occasions that you can get some tax relief using specific strategies and obviously talking to us about that. But you know, people always, this is a question I get the other day, and this might be on your mind too. Life insurance companies issue annuities. Life insurance, when you die, that death benefit passes tax-free, probate-free to your beneficiaries. I always say life insurance is the best return on investment you'll never see because you're dead. So life insurance companies issue annuities, but the death benefit on annuities are not tax-free. Life insurance is tax-free, that death benefit. Annuities issued by life insurance companies, those death benefits are not tax-free. So there's not a lot of tax relief there. My advice to you is if you're looking at retirement already in Chapter 2, which is about you, it's all about your income floor. It's all about the income that's hitting your bank account regardless of what happens in DC, LA, Iran, Great Britain, France. It doesn't matter. What's hitting your bank account so you can go live your life? You already own the best inflation annuity on the planet, that's Social Security. Do you need more guaranteed income like that? If you have a pension, do you need more guaranteed pension income like that? What's coming into that account every single month? What's the continuation of that income floor when you pass away and your spouse and or family gets it? What's that continuation? Do you know that? You should. You should. Yes, the taxes are important. Yes, you can figure all that out. But figure out the basics first, and the basic is that foundational income floor that you need in Chapter 2, knowing that there's 3 levels of retirement: go, slow go, and no go. And you got to spend the money and take advantage and travel and do your thing while you still can, because there will come a point in time, if we live long enough, we're drooling in a drool cup and crapping into a diaper. It's true. So, do me a favor, go to my site, theannuityman.com. You can run quotes, you can download my owner's manuals, you can see videos, you can do all kinds of things. Best consumer site on the planet. Okay, everything's free. Free consultation, everything. But do me one last favor. Above my head's a ticking clock. Nothing's going to explode. It is a video I did on lifetime income. And it's a video that I did on lifetime income with the looking at it from the standpoint of what's going to happen with artificial intelligence and how that's going to change the game for lifetime income pretty soon in the annuity industry. It's important that you view that. All right? My name is Stan, the Annuity Man. See you next time.